if there's 2 meetings in a row with no rate hike, that actually says that we're done.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from San Diego. Here we go. It's sunset. Here at the PRMG Retail Leadership Conference. They don't know I'm doing this until they saw the signature wave. Thank you to our sponsors for putting on this nice boat cruise. It's a little dinner cruise in the evening, and we've got a lot of great sponsors that are here. It is going into the back half of the year on the eve of the Fed. The Fed's talking. Hey, let's go! Let's go! Let's go! Let's go! Anyway, we are listening to the Fed speak tomorrow. It's the all-important meeting, as we all know. And what is it going to say? Are they going to raise it 25? I'm going to give you the best case, worst case scenario, okay? The Pollyanna perennial, most bullish case, most positive outcome it could be is there's no rate hike tomorrow and no rate hike in November 1st. But we won't really know and feel like we had no rate hike. You know, there we go. Uh-oh. We got Telexpert there. Dan Catnell, Big Cat. Let's go. So we have, if there's 2 meetings in a row with no rate hike, that actually says that we're done. So even if there's a pause tomorrow, everyone's going to wait to see up on November 1st, there's another quarter. And if they go up a quarter tomorrow, everyone's going to wait to see if they do another quarter November 1st. So, guys, damned if you do, damned if you don't. I mean, we're not really out of it until at least after November 1st, in my opinion. But once that happens, there's some certainty. So the certainty is where the terminal rate will be. How much will money cost the world, especially if they are investing in treasuries, U.S. treasuries, or whatever. So we're going to find out one of our last 2 big pieces of information tomorrow. And it's super, super important. There's Kevin Petaway. He finds his way everywhere. He's the man. Praise the nation. Love you, brother. So CPI, there's a lot of talk about CPI. And remember, a lot of the reason that the CPI went up is because of energy. And we know gas prices have gotten expensive. Oil prices have gone up, thus gas has gone up. And does those input costs into production also continue to go up and say sustain? And so that came out on the PPI number last week as well. So we have some inflation data heading into this Fed meeting. We're going to see what they have to say tomorrow. The Q&A section is super, super important. Okay, so enough about all that. We're all watching here. This view sucks. This is so much better. Downtown San Diego. Don't sleep on San Diego. It's pretty cool little city here. It's fall. The days are now shorter than the nights. So we have passed the autumnal equinox. So days are getting shorter and nights are longer than the daylight. And we'll see this seasonal effectiveness of time on our psychology and our psychosis as we make our way into the winter solstice, which is the longest night, which is typically December 26th or something like that. So between now and then is the worst that we're going to see at this seasonal part of the cycle where there's less business. The data is backing that up. Home builders are starting to cut prices more than they have. Demand is even down for home builders. If you follow Altos Research, Mike Simonson and team, they're part of the Housing Wire group. They do a good job of talking about listing data. The peak of listings and home supply was around November last year. And then, of course, the amount of price cuts on listings, I believe, peaked out at 42% of all listings ended up with a price cut going into about that same time in November. And then the market starts to turn. So tell your borrowers, like I said last year, this is your last best good time to get a house, because when rates come down, and they will, when the Fed stops raising rates and then eventually cuts, okay, rates come down, there's more demand, there's more people, there's less houses still. And so will we get into the high fives again, low sixes? Either way, Everyone thinks we're going to stay elevated, higher for longer. The Fed keeps telling us that, right? They say, point to my badge, I'm a cop. Listen to what I say. I say higher for longer, get ready. But you know what? They can only keep it high for so long. The Bank of Japan and Bank of England, which is our two biggest competitors, right? I would say the Euro zone as well. They sell against our treasuries, whether it's the gilt, the yen, or the euro. We're holding back, right? Remember, the Fed is the biggest treasury salesperson in the world. And they say, well, if you guys are going to go higher on your rate, we have another quarter in our back pocket. Hell, we have 2 more quarters in our back pocket. We will push the U.S. economy closer to the edge of recession if you guys want to raise your rates. So apparently, all that jockeying back and forth, we're going to get a lot of data out this week. So keep your eyes and ears open for that. Speaking of our government, did you know that the U.S. government owns 1% of all Bitcoin in the world? I found that fascinating. Through all their seizures and enforcement actions, like FTX, for example, taking over all their cryptocurrency and coins, something like 3.4 billion in cryptocurrency. Most of it is Bitcoin. So the U.S. government auctioned off like 200 million in July, and they're going to do like 200 million a month, for each of the next couple months until they get rid of all that supply. So look for the price to come down. Quarter end window dressing is a real thing with stock prices. That's going on right now. You're watching the stock market. September is kind of a shaky month. If you remember last year, September all the way to the October lows were the volatile parts of the stock market of the year last year. Obviously, inflation's way down compared to last year. So it should be a higher low in the stock market, even if we saw a 10% correction. So peak rates, I think, are in. I think the low of the stock market's already been in. I could be wrong. But we see that 432, that 433 level in the 10-year treasury just keep getting bumped up against, and it's holding as resistance. If you think the 10-year treasury is going to keep racing up and rates will be in the 8% range or even higher, what makes you think that? That the economy's so good? Or that the inflation's running high? I mean, what makes the 10-year treasury go higher, right? Our economy is still the number 1 economy in the world by far. And people want to buy U.S. treasuries. It's a safe haven bet. Earning 5% on a 10-year treasury is a very safe bet. So if you're looking at treasury sales and fixed income security sales all around the world, look no further than our 10-year yield and the fact that it just can't seem to get above 433. So I don't think it'll get much higher. I really don't think it can break through that resistance. But we shall see. I don't have a lot more to add other than just watch. Hopefully you enjoyed this little sunset here. We got some sailboats. Don't drop your phone, KP. Life is good. And we will get back to you. It's really nice to make sure that there's a lot of companies out there. I went to the Mortgage Collaborative last week in Tennessee, NAMA Connect. Got to see Tony Thompson and group. There are a lot of lenders out there who are all in, investing in their people, investing in their platform. Sponsors that see that we're investing and they want to be with us and they want to come be part of this. And I know there's a lot of great companies out there that are doing the same thing. So let's get back to work. Let's grind. Let's keep hitting it. Have a great week. We'll get back to you in a couple days. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.